moment we are back to earnings analysis. It was a quiet quarter for Gujarat Pipavav. There was some operational weakness persisting, but the company saw sequential improvement in volumes. Jakob Friis Sorensen, Managing Director, Gujarat Pipavav Port, joins us now. Mr. Sorensen, I don't know if I pronounced your name properly, but I'll stick to Sorensen. Volumes have improved if you looked on the quarter, but on the year, your volumes are still lower. Would fourth quarter be substantially better? What will be the distance from FY20 when you end FY21?
Good morning. Thanks for having me. And you are more than welcome to just call me Jakob.
Okay.
You are talking about the volumes, and I guess you are talking about the container volumes.
Yes.
And that is correct. We have seen fewer skipped calls from the shipping lines, and that is encouraging. But at the same time, there is a little bit of an international upset in the global shipping market at the moment, which I'm sure you've also been talking about. We have an imbalance, we have lack of empty containers, and it seems like China specifically has come back very strongly, and that is hurting us a little bit. Overall, I'm quite happy with the volumes that we have just finished in third quarter. And especially on our non-container volumes, that is really helping us to keep the overall margins in place in a very satisfactory mode.
Jakob,
you ask as well for the next quarter. You ask for
yes.
Quarter 4, and that means the beginning of this year.
Yeah.
We are actually having Chinese New Year today, and normally that would signal a small peak and then a slow period in the rest of February. This year is different. And this fourth quarter, I think, will be strong on volume, and the container volumes will continue to grow. And that is, of course, encouraging. We see that coming in with basically no cancelled calls.
Okay, I didn't refer only to volumes. I was also referring to the revenues. If you looked at your 9-month revenues, you are still about 6% lower than last year 9 months. So for the full year, do you think your revenues can beat FY20, and if yes, by how much?
No, I think because of the lower container volumes, the revenues are naturally slower. And although we have more volume in bulk, it doesn't make up for each other. Containers are still the more profitable part of our business. So we'll be slightly below there. But I do look more into the future than in the past. And I'm quite encouraged about what we see for this fourth quarter or this beginning of 2021. And I think we will see strong volumes going forward.
Okay, Jakob, I was exactly coming to that. This big container shortage, which is a big problem for Indian importers and exporters alike. So what's happening on this front? By when do you see normalization? What's the demand-supply mismatch like right now? And what can we expect in your numbers as you go forward into the first quarter of next year?
Yeah, see, it's a good opportunity to explain these macro mechanisms that are happening in the global trade. And when you're looking at ocean transport, it's not the same as the airlines. The shipping lines need quite a long time to mobilize the capacity again. It's not like an airline where you can probably mobilize a flight in 24 hours. To mobilize the global fleet, which was obviously reduced quite a lot due to COVID last year, it takes a lot more months, and it's still a difficulty because we have COVID, we have to mobilize sailors and so on, and they need to be vaccinated and get aboard the ships. And at the same time, the trading pattern has changed. A lot more people are ordering online. I guess maybe the money they used to spend on ski holidays and so on, now they're buying online. Paint for their house and maybe a exercise equipment or what, and all of that has to be transported by sea. So the imbalance is actually quite significant. To answer your question, I do think that in the next coming months this will even out because it is a pure market mechanism. It's a supply-demand mechanism where the prices will even out over the long term, and there will be more capacity coming in. But structurally, you have containers sitting in the US, you have containers sitting in Europe. They're full, and people want to empty them as fast as they can. But there is a backlog also in distribution centers and warehouses and people, frankly, to do all this. and that will take a few months to even out.
Okay, point taken. That explains the problem very well, gives us a perspective. But Jakob, can you...
I will just add to that
Yes.
this is, of course, when you're then sitting in a port, it's quite frustrating because there's very little we can do to this macroeconomic environment that's happening around us.
Fair
What
point.
we have been able to do is to make sure that our operations are, first of all, cost efficient. We've looked a lot on the cost efficiency of our own cost, and I think that also is evident to the result that we are presenting. The second thing is we have, of course, or the first thing actually is we make our people safe and we make sure that we operate uninterrupted. So we are not part of the bottleneck.
Okay.
I just wanted to mention that.
Got that, yeah, got that. You're part of the chain and not at the end
Yes.
point to be able to unclog it. But therefore, can you give us an idea?
Unfortunately, I'm not deciding everything. Unfortunately, I'm not deciding everything.
Got that,
we will
Jakob.
see.
I wanted to know how you see FY22 therefore. One, because things will unclog and you're seeing a rapid increase in people transporting and asking for things. And two, a part of India's dedicated freight corridor will be commissioned. So what at the moment is your expectation on both revenue and EBITDA front for FY22?
Well, I'm a lot more optimistic about the future than I am about the past. I'm so happy that you mentioned the DFC. I have been saying consistently that is going to be a game changer. We are slightly delayed, but that means a couple of months. We will maybe go live in April. That means Pipavav port will be linked straight. We have our dedicated Pipavav Rail Corporation link that goes up to Sorensen. And then we are linked directly to the DFC, and it is electrified. It's going live here in April of 2021. And it's a lot more capacity, and I think that cargo will move from road to rail. It also enables the customers to be a lot more able to predict how long is the transit time, where is my cargo, and when is it going to arrive. So I think that's quite significant for India, and in order for India to be competitive with the global logistics markets, I think we will have a lot more reliability coming in, and that is going to help everybody.
Okay, Jakob, just a final question from my end. I believe you did undertake some, hike in tariffs in October, or was it November? And what's the plan on tariffs in the next 1 quarter?
Yeah, that's correct. We did a modest tariff increase adjustment last year, and I think it was potentially, looking back here, it was too little because it just got accepted in all the other things that moved around. I think what we'll try to do this year is that we will adjust a little bit more. Some of our neighboring ports have taken double-digit increases in their tariffs, and we do have extra costs to cover in this turmoil time. I think there's a room for more improvement there as well.
Okay, well, we'll leave it at that. Jakob, it was a pleasure speaking with you, and thank you for the perspective on why there is this containerization. Okay.
Always a pleasure. Have a good day.
You too, and a good weekend as well. Let's quickly take a look at the past financials of Gujarat Pipavav. The revenue picture will come up for you for the past 5 years, and that's the revenue picture, steady as she goes, and it will be followed by the profit performances.
Profit as well on mostly a rising uptrend right through FY20. All right, let's take a quick break on that note. But on the other side, we continue to talk business and talk earnings.